Welcome back to Incorporate, the podcast for business owners presented by the UB School of Management Center for Entrepreneurial Leadership, where we explore the strategies and decisions that help businesses grow stronger and more sustainable. I'm your host, Susan Steffen, Executive Director of the UB Center for Entrepreneurial Leadership, and joined as always by our producer, Jordan Lima of Lemur Studios. Today, we're talking about a topic that has become increasingly complex and increasingly important for small business owners: employee benefits and insurance. For many companies, benefits are one of the biggest investments they make in their workforce, but they're also one of the most confusing areas to navigate. Joining me today is Jeremy Higgins, President and founder of the Higgins Agency Group. Jeremy has been working with companies since 1999 to improve business operations across areas like payroll, HR, and employee benefits. Today, we'll talk about how small businesses should think about benefits strategically, not just as an expense, but as a key tool for recruiting, retaining, and supporting their great employees. So, Jeremy, welcome to the podcast.
Thank you so much for having me.
So, every year, I hear the same complaint from business owners. They see that renewal envelope come in the mail or the email, and they see double-digit increases in health insurance premiums. Tell us why that keeps happening, and is there anything we can actually do about it?
Yeah, no, I get that a lot because I'm usually when I walk in the front door, people are not happy to see me as we're usually delivering bad news, right, as it relates to that. There's no single answer to all of it. It's a culmination of a lot of bad variables mixed together. One is a very inefficient healthcare system, all right? A lot of middlemen in between in the process. Rising costs of everything, right? When we look at technology costs for hospitals, less reimbursements from governments, medications, which is probably the biggest driving factor right now. Why is it that the cost to produce a drug 10 years ago was $100? Now the cost of that drug is $400 for the exact same drug that didn't change at all. You get into research and development, get into technology, whether that's, AI infrastructure, investments of these things. Somebody's got to pay for all of that when it gets into. So everyone's trying to get a piece of that pie, which is causing these to sustain significant double-digit increases year after year.
Yeah, so if you're delivering the bad news personally, I can't imagine how much fun that is. But so when you're the owner and you get that bad news and the first reaction is, oh my gosh, either I can't afford it or what do I have to pass this on to my employees or what do I do? How should they be thinking about that news? Like, are they thinking it's just what it is and I have to deal with it, or are they thinking there's something I can do differently here?
Yeah, a lot of times it is what it is, right? It's the most challenging part for us in some years, especially 2 years ago, right? 16% price increase was actually one of the best answers you could have. Short of, there's two things to do, right? You either take it on the cheek or you reduce benefits, right, and drop down to a lesser costing plan, right? So you either pay the same or you pay a little bit less, but now you're not getting that benefit up front. It's just trying to maximize that dollar the best way you can.
And so obviously health insurance is is probably the biggest one that everybody thinks of when they think employee benefits. But there's a lot of different choices amongst their benefits. So how should a small business owner be thinking about that whole package of benefits? Like what, I know we need to dig into health insurance, but what else are we going to be talking about? What are the benefits?
Now there's a lot of tools and resources and other insurance programs that are available that can complement your health insurance now. So when you talk about health insurance, it really needs to be a strategic approach. So you don't have to be on those expensive like platinum type health insurance plans where you can go down to a less costly silver plan, but you can add on some of these other services like accident coverage or hospital indemnity coverage, where you can take a plan that's only a couple dollars a month, combine that with your health insurance plan, and you have a whole package again instead of just being on that very expensive health insurance plan just in case I need it.
So just look at health insurance as one piece of an overall benefits package instead of as the only thing people care about.
Correct. It's a part of the puzzle, but it's the biggest piece of the puzzle for sure, but don't ignore the other puzzle pieces.
Yeah. So how are you seeing it play out for especially our smaller businesses, small to medium-sized businesses, in terms of their benefits package being a key to either getting good employees or keeping them? Like how much do benefits matter in that retention and recruitment phase?
It's huge. It's huge. And that's the right approach. Not everyone looks at benefits that way. Benefits is absolutely a retention tool. It's absolutely a recruiting tool. It's part of the overall compensation. You're not just paying an employee employee a $50,000 salary. You're paying an employee a $50,000 salary plus the thousands of dollars you may be contributing towards their health insurance. And owners need to really stand up and take credit for that and show that. I can tell you that probably 90% of all employees have no idea how much the real cost of health insurance is, the premium. The employees just see their portion, right? Their deduction that comes out of their paychecks, and had no idea that the price tag for that single plan is $750 a month. So the employer may be paying $500 of that. The employee only sees the $250. The employer needs to let them know, hey, you're getting $500 a month. That's $6,000 a year towards your health insurance benefit. We do this for hundreds of companies here in Western New York, and ironically, you'll see somebody leave Company A, go to Company B, and it wasn't because of a salary change. It was salary neutral, but because Company B was offering a more enticing benefits package. So it really is important.
I had a boss one time that would make it very clear how much he was spending on our benefits and whatnot. And can you do that? Can you say like, well, what you're actually getting from the company is this much? Yeah. Like, is that okay to say?
Oh,
that?
absolutely.
Okay.
Yeah, I strongly encourage people to do that. Yeah, usually you can do that through benefit statements, right? When you look into, because the same goes for like 401k matches and things like that, right? Your compensation package, right? Absolutely, employers and business owners should be taking credit to let the employees know that your compensation isn't just salary.
So being a little more transparent can actually be a good retention tool when it comes to that. Yeah. Well, it's funny. I have heard, just among friends and acquaintances, people say, oh, I can't leave that job because the benefits are so good. So people who think maybe they could get a higher salary elsewhere realize, but, these benefits, especially if it's a good 401k match or a really nice, addition to your health insurance plan, or like you only have to pay a minimal amount of it, that's important, to families.
I've heard that a lot. I work in the arts, amongst the arts community, and there's a lot of people that have a day job when they're doing arts because that's tough, and a lot of the people there are married to a job because of the benefits it provides and because of, they need the paycheck. That's the thing. When their passion is elsewhere, but the benefits, I think, are a huge draw for a lot of people.
Well, right, because when something goes wrong, you're going to wish you had that disability insurance.
And in some cases, the benefits package could make up 20%, as much as 20% of your overall compensation, especially when we start talking about family plans and family coverages, right? Right now, the most expensive plan in Western New York, when you look at groups between 2 to 99, the top end platinum level plan is $3,000 a month for family coverage. That's $36,000 a year.
Wow.
Just that's mind-blowing to me, I'll be honest with you. It's like terrifying.
Just to carry the card in your wallet. And that's not even for free health insurance. You then still have co-pays and out-of-pocket costs for that.
Wow.
I'm speechless here.
Okay, mic drop.
Well, so
don't get sick.
As a very small business owner, which we're getting to pretty soon, I've just got my insurance through the exchange over time, and looking at those top tiers, I'm a single guy. It's more than my rent. It's very high, and for the most part, that's the thing. Things can happen, so you gotta. But generally, I'm a healthy guy. I don't go to the doctor much. I don't need the benefit.
I don't know that snowboarding might change
it. But then things happen, But it's a terrifying thing to think. Well, I've got to pay how much for this? I mean, it's remarkable.
People should not have to make a choice between health insurance or rent or the mortgage, right? Because that's where some of these price points are. Again, I'm speaking that's on the highest level plan. But even if you talk about the other end of the spectrum, right? That's $1,000 a month for single coverage. The lowest possible costing plan you can get right now for a group health insurance plan is $503. That's as low as it goes, $503. And it only comes with a small $10,000 deductible.
Oh, my goodness.
And then everything else is in between.
Yeah.
All right. So that's the variance rate now as we stand in Western New York for companies 2 to 99.
So if you're really small, if you're on the 2 end of that 2 to 99, you're a really small company and you think, well, this all sounds good for the big boys, but I can't really do that. Are there ways for a very small company to be able to stay competitive with benefits and use it as a tool, or are they kind of priced out?
No, they're not. The common misnotion is larger companies, right, have better health insurance rates, and that is not always the case. So what's unique about New York, unlike any other state, most other states across the country, right, we are community rated. Community rated means the rates are the rates. So whether you have 2 employees or 99 employees and everywhere in between, the rates are set by New York State. So it doesn't matter the demographics, it doesn't matter the gender, it doesn't matter the age, right? You are getting the same rates at the same price from that carrier when you look at it. All right, so it's only over 100 do you get into different funding arrangements where claims of your employees actually dictate your premiums. Sometimes that's good, sometimes that's not so good.
So if you're a small company, you can call a broker like what you do, and as you're shopping for insurance, you shouldn't think that you're getting kind of stuck because you're a small company. Your rate is your rate.
Correct.
So there's not even a like this guy can get me a better deal. It's
Correct.
The rate is the rate.
Yeah, that's the beauty of it. There is no shopping around of the actual plan itself. The same plan from the same carrier is the same rate for every company in Western New York, regardless of industry, if you fall into that 2 to 99 size.
Interesting. So it's really more about finding a benefits partner who can help you strategically than it is somebody who's going to find they can find ways to save you money because of the plethora of plans they can put together for you, but they can't change the cost of it.
Exactly.
Okay.
Each carrier has roughly 30 plans to choose from.
Wow.
Okay. Of those 30, that's 9. We have 3 major carriers here, right?
Wow.
So you have 9, almost close to 100 plans to choose from. Now, you will probably never use 75% of those plans. They're there because it looks nice for the carrier to say, hey, I have a variety of choice, but in no circumstance would you ever want this plan because the plan right next to it that's only a couple dollars off or difference is the better plan in every scenario. So that's very overwhelming for a lot of employers when they see the typical grid from a broker and there's 13 plans that are thrown on there and it's, I don't know what all this means.
Right. Well, and you're trying to predict the future, right? What's more important to my employees? Could this happen and they need this, or could we're all trying to do that.
If you're buying through a broker, do you pay through the broker or do you get set up on like the same portal through the insurance provider? Like how does that work?
You can purchase through a broker, which the broker is just acting as an agent, right? But you're still paying directly, you're enrolling directly with the insurance carrier. You can go to the insurance carrier direct. Doesn't change your premium.
Okay.
It just means you don't get the help.
You don't get the help, right?
Yeah.
So,
so my question was more: do you write the check to the broker?
No, the insurance company.
Okay.
Yeah.
Because sometimes, to add insult to injury, you're paying a bunch of money. You have problems with like their payment portals and stuff like that, and they're ridiculous. On multiple different insurance providers over the years, it's like you're trying to pay them this exorbitant amount of money, and you can't log in. Yeah, I know. It's like why isn't the login working, or why isn't my information populating? And then you're on tech support calls and all this stuff, and it's just like, oh my God. So I would love it actually if there was a way to pay a third party that was just like, okay, here's the money. Thank
here's
you.
the check.
We got it all set up.
And there are services, right? There are services that will do that for you, right? Consolidated billing or third party billers, but now you're going to pay someone to pay your bill for you, which I think is
why are we adding more expense to this?
Exactly, right. Other than just going into the carrier system, set it up for auto pay, you never touch it again.
Yeah.
What are the basic benefits now that employees are expecting today? Because I know it changes over time, like what people consider important. What's a great package look like today?
Yeah, I mean, so we'll talk about the core, right? The core benefits really are health, dental, vision. I think those are musts. You are a 2-person employee. You got access to everything everybody else does at those levels. You'll look at some funding accounts, right? This is where insurance loves acronyms, right? So you have FSAs, you have HRAs.
Yeah, we got to explain all those, Jeremy.
HSAs, right? Those all mean different things in funding arrangements. So maybe one of those factors will help. Those are all just vehicles that allow you to put benefit dollars away on a tax-free basis. They just have different rules around each one of those. You start getting to what we call the ancillary services, right? These are the things that I really think you can get huge value for low dollars, right? When we start talking about life insurance, we start talking about disability insurance. And then we get into the next core of benefits, which is what we usually call worksite products. These are like the accident products, critical illness, cancer products, specified disease products. All right, those all can be done on a voluntary basis, or the employer can contribute towards some of that, or a combination of the two. But those are really the core components that you can make up, that you can take a company with 10 employees and rival the same offerings that a Fortune 500 company could be offering.
And I know, a big one that people look at is the contributions they're going to make to their retirement fund, right? Some kind of 401k or 403b. Is there a trade-off that companies should be thinking there? Like, how do you know, should I spend the money on a disability insurance or should I do a match? Like, how does a company weigh those, like what's important to their perspective or current employees?
Yeah, a lot of business owners struggle with that, right? I don't want, you know what the best thing to do is? Ask your employees. Because it's going to be, because it literally, it's going to be different, right, for every type of organization. If you have an older population, right, more mature, have families and kids and things like that, that 401k plan is going to be more important to them versus if you have a younger workforce, right, where your workforce might be in the 20s, they're not worried, right, about their retirement. They're not thinking about that, right? They're just thinking about how to save up as much money as they can right now to buy a house, right? Or to get into that. So it's really important, I think, to survey your employees. We do that for a lot of our clients, right? As far as surveying some general questions, hey, what's important to you? And based on that information, we tailor the benefits to meet those exact needs.
So a new one that popped up for me this year was pet insurance. I was like, boy, I never knew I could get employer-sponsored pet insurance before.
You can. You can. It's not recommended.
No. I was like,
it's not recommended for the employer to take on that responsibility. Just have your employee go to the website of their choice. There's really not a discount per se. Usually that the pet insurance companies, they want to get into like a big company that's got hundreds of employees so they can set it up through the convenience of a payroll deduction. You could just go to the same company direct, put in your credit card, buy the plan that you want, and call it a day.
Gotcha.
We get asked that a lot. And I tell employers, please don't get involved with offering another headache because there's administrative burden or concern or any of that.
Well, and if you don't cover my pets, whatever, I'm going to be coming to you, the HR person, going, this benefit is awful.
Yeah, it didn't cover my I don't think any HR person wants to sit there and talk about why their cat surgery didn't get covered the way that was supposed to.
Yes.
So I'm imagining someone writing a job description though and writing like pet insurance on there and then thinking that's going to draw people in.
It does, right? It is, right? It's trying. People are trying to be unique, right?
Yeah.
Trying to be unique and differentiate themselves from others. So that's absolutely the top-notch benefit. That's pet insurance, and it's like, now the reality of it is just go to the website directly.
How does a business figure out what is reasonable for the employee portion of the benefits? Like how much should, is there a rule of thumb? Like how much should the employees be contributing towards their benefits?
No, that's the hardest part, right? That's the biggest part of how much. Yeah, usually the number one question I get asked is what's everybody else doing, right? So I think benchmarking tools is really important. It really determines your industry, right? Whether you're a non-for-profit or if you're a doctor's group, right? What is your competitors here in the area doing and offering? What do we typically see? What's competitive? Those are the types of things that you really need to roll up your sleeves with a strategic broker, right, who has the tools and resources to be able to tell you, all right, great, here's what we're seeing out there. Here's what we should expect. Here's where you are. What's the feedback? You can tell by your enrollment counts, right? If you have 50 employees and only 5 people are on your plan, chances are you're not contributing enough for them to value that versus a 50-person company where 30 people are on the plan. You're usually never going to have 100%. Somebody's got a spouse that works for, municipality or a teacher or something like that. But those are telltale signs. Just looking at your straight numbers without even opening your mouth, how many people are enrolled of your total employees gives you an idea of where your employer contribution is trending.
Do the employers ever... Is it part of the feedback loop? Like, do they know if people aren't coming to work for them because of the benefits? Like, do they even see that feedback?
Oh, yeah. A lot of it, the good employers do when you ask those questions, all right? Getting good candidates is one of the hardest things to do right now. And benefits is usually a big sticking point for that. So we've had a lot of clients reach out to us to say, hey, we've lost a couple candidates that we really wanted because they didn't, the benefits wasn't strong enough. What can we do to fix that? So then we'll get into those strategies. On the flip side of that, we are actually directly involved in that. We have several of our clients where they have potential candidates where health insurance is important. They plug us in to the interview process for us to speak with the candidate, go over the menu and the plans and the cost to answer all of those questions so then that candidate can make a clear and concise decision. Usually that works out pretty advantageous for the employee once they have somebody kind of sit down versus just handing them a sheet of paper and
Because I know you're not allowed to ask that on the first interview, right? You can't say, by the way, if I get hired, what are the benefits?
Correct, those needs. But we can, right? It's our job to sit down because it's confidential
Yeah.
information, right? For us to sit down and go, hey, what typically happens to you in a given year? Okay, based on what you just told me, this is the plan for you.
Okay.
The sheet of paper you just mentioned and the packets and all that stuff
Yep.
are exhausting too. So it's really
Yes.
helpful to have someone go through it with you and
Yes.
explain what it is.
Yeah.
I remember getting those packets and being like, oh, okay, and putting them down and
You
not
see
even looking at them.
some of the employee benefit booklets out there are like 20-something pages long,
Yeah.
right? And I don't know if you see some, I mean, we know some firms that are out there giving PowerPoint presentations. Nobody wants to sit in a PowerPoint
I had to do a
presentation over
PowerPoint
their health
presentation.
insurance
Yeah.
plans.
I had to
We
do
have a one-page sheet, and it's a reference guide. And our job is to tell a story. Our job is to sit there and walk you through the story of the health insurance plans and where these are good fits. And you're going to, I use the analogy of a bus, right? I'm the bus driver. I'm driving you through the plans. You're going to get off at the stop that sounds best for you based on your needs and things like that, because different plans do different things.
I'd imagine too that there's just a few key things that most people are concerned about. And then in the deep dive in the 27-page book, if you have an additional question, you can find it in there. But you could summarize what people are really looking for in one page pretty easy, I bet.
I've been doing this 20 years, so I can tell you that I've oversimplified health insurance. To oversimplify, these are the three things. This is the three things. This is all you need to care about, right? Who can I go see? What does it cost when I go see them? And what comes out of my paycheck?
Yeah.
That's it. Those are really, to oversimplify the whole thing, that's what everyone cares about. And our job is to make sure we have the answer to those three questions, the best answer.
Business owners have to know that first one about who can I see when they're chasing savings on their health insurance plans, right?
Yep.
Which might mean changing plans. Changing doctors is a big deal for a lot of people.
It is.
And now I would think we don't have that many plans, so most people in Western New York at least take most.
Yeah,
of the
we're
plans,
spoiled.
you know?
Yeah, we're spoiled here in Western New York. You're between the big three carriers, you're talking 97, 98% of everyone accepts all three of those from that. So that is not common in big markets. You can go down to like Atlanta, Georgia, for example. If that market has 55 to 60% of the marketplace, that's a big market. But they have 10 carriers down there to choose from. So talk about comparing plans, options, and designs on there.
I guess it's good.
So
That's good. We're smaller.
I have to say, all this sounds very terrifying sometimes.
Yeah.
I'm glad we're in Buffalo. It's good to hear.
Yep.
I couldn't imagine being in another market, though, and having to so thoughtfully choose your insurance plan versus your doctor versus what care you're going to need. It's a lot. So having helped to navigate it is important.
To add a little bit of comfort here for business owners located here in Buffalo, I mean, New York's a rough state, right, to do business in. But if we were to continue going down the 90, right, health insurance plans in Rochester are about 10% higher than Buffalo.
Really?
If you go from Rochester to Syracuse, it's about 10% higher. If you go from Syracuse to Albany, it's about another 10% increase from there. And then by the time you get to New York City, right, those plans are about 50% higher, right?
Wow.
You're picking up 10% as you head down the 90.
Is it because of proximity to New York, or is it?
That's what they say, right? Proximity to New York, market segments, whatever. But that's how the trend has been over that. So if you were to come, because we have clients all over the country and all over the state. So when you look at the rates, dollar for dollar, plan for plan, it's just fascinating to see how we actually have the lowest rates in the state, in the area, right? It feels a little bit better when we're talking about $1,000 single plan.
Could be worse.
Right,
That's
it could be worse, right?
So we've been talking obviously about your specialty area, which is employee benefits in terms of like the deductions that you get out of your paycheck.
Yeah.
But I want to fold in for a second other perks that may or may not be something that comes under your purview, but that could employees or potential employees would see as a benefit. So things like a flexible work arrangement, or, I know nowadays you hear the unlimited time off thing.
Yeah.
Like, how do those play into a complete package?
They do. It's really culture driven, based on that. The whole concept around the unlimited vacation time stuff is obviously it's manager approval. So you're never going to get approved. Like, who's going to walk in and say, cool, I'm going to take the next 6 months off, and the employer is going to be okay with it, right? So it's always subject to approval. It's actually by doing it that way, it's upon termination, you don't have to pay out the remaining vacation time. That's really what the construct behind that is. Work-life balance is really important. A lot of employers are are trying to focus on that, right? When you look at, right, not too long ago, I'm sure everybody was remote, right? And now a lot of offices have said, hey, time to come back to the office. We're paying a lot of money for these spaces, so need to come in and use them. Or it's a hybrid approach, right, when you get into that. So it's just getting people out of what we've had to go through for the last couple of years to get that in. So that's flexible. Paid time off is usually important, right, that work-life balance. But, being able to grab a laptop and work from anywhere is also, nice for employees too, right? I have an employee right now in Florida. Right? Well, great. She's down there to spend some time with her family, but she's got her laptop, and I call her. She's going to answer. So I really don't care where she is because she's capable of doing her job from wherever she needs to be that's out there. So those are important. Obviously, you can't do that in more of a blue-collar environment, right? You're a machinist. You're a welder, right? You got to be here to machine and weld, right? Versus, someone that's more sales or, in front of a computer all day long.
It's funny, I actually read somewhere that when a company offers what they don't call it unlimited, but the unlimited paid time off, that people actually use less because they're concerned that it will look bad. Compared to if somebody tells you got 4 weeks, there's nothing wrong with using 4 weeks. But if somebody says you're unlimited, you're like, ooh, I think this guy's only taken a couple, and I want to look like I'm a hard worker and get ahead, so I better not take 3. And, that it actually I don't know if it's good for the employer or not, but it could actually create more like burnout and stress.
It could, burnout and stress, because it's going to be your hardest workers that are the ones that are going to be, should I take the time off or not? Because you're always going to have a small population of your workforce that's going to be making sure they maximize every single minute and then some of it.
So for those people that would maximize every minute, if there's not a number defined, are you saying that they wouldn't take the time because they'd be like, well, what is the limit? Or they'd try to push it, then they get fired.
Some are going to push that. Some are going to push that unlimited. Typically for most of our clients, right, I think that was kind of a trend for about a 12 to 18 month period. We don't see it as much anymore. I think everyone's kind of come back because it's harder to manage and track than it is to just easier say, hey, great, here's your 4 weeks. And then you request a time off. Great, you got 3 weeks and 4 days, go. It's just easier to track and everybody's on the same page.
I think a lot of the flexibility benefits too are really put the onus on managers to have KPIs and to know, like, so if you're sitting in front of me and I see you there for 8 hours, I'm like, okay, they worked 8 hours. But if you're at home and you're not in front of me, now I need to know that you've produced 8 hours worth of output or that the value you've created is worth that. And I think, it's certainly a better way to manage your employees, but it takes a little more time on the management. So I think the knee-jerk is, I see you, I know that you're there. Although those of us who've worked in office environments know sometimes people are really good at being there for a long time and not getting a lot done.
Well, and that's the whole thing, right? There's two sides of that coin, right? There's two sides of that, right? To sit there and say, if I have an employee that can, has scheduled for 8 hours but can do the job in 5 or 6, should I penalize them, right? Or I have an employee that intentionally takes 8 hours because it needs to fill my day when I could be doing, I could start on the next project and things like that. So it's really a bigger question as it relates to the strategy than just a perk to put on a bullet point for a job postman.
It's really about how you manage your employees and the culture that you create and all that, the big kind of stuff. Jeremy, I want to go back because we touched on it briefly, and I know it's confusing to me and probably confusing to a lot of people. Are these plans, the high deductibles, the HSAs, the FSAs, can you just demystify all those different acronyms and tell me what they mean?
Yeah, there's 3 main boats, right, when we look at these things, right? The first is the HSA. That is the Health Savings Account. This is employee owned. It is literally a banking account. It's a checking account at a bank, all right, that you set up. Not all banks support these, all right? You got to pick a bank that does. Here locally, like Bank on Buffalo, Key Bank, those types have those, right? The IRS controls these as far as who's eligible for them. You have to be on a very, very, very special health insurance plan that has very special criteria. And if you meet all of those criteria, then you can dump money into your checking account on a pre-tax dollar basis. Pre-tax dollar basis is roughly like a 30% savings, right? Depending on your tax bracket. That money's there forever, and it comes out gross tax-free, and it comes out tax-free as long as you use it for qualified medical, dental, or vision expenses. All right, so it's kind of like a mini IRA, right, for health insurance. If you make it to the age of 65 and you got money left over in it, and you don't have any more medical expenses you don't want to worry about, you can just take the money out and claim it as income at that time.
And it's earning interest that whole time?
Yeah, absolutely.
Oh, okay. And so you're putting that in because you're on some kind of high deductible
I'm
plan.
on a high deductible plan that meets the IRS definition of a health savings account. This is where I think this is the easiest fix for the government to make. They should just sign the bill that says, hey, everyone can have an HSA, regardless of the health insurance plan.
Because then you could put money away today if you wanted to retire early, if you wanted to supplement your Medicare part, whatever.
Medicare, cost, co-pays, right. That's a whole nother animal in itself, right, on the Medicare side. So that's that vehicle. The problem is you've got to be on a special high deductible plan to take that, right? And that special high deductible plan right now means everything has to be subject to your deductible, including your scripts.
So that's where like maybe younger people do that.
Yeah, maybe younger people do that because if I go to the pharmacy and I need a $200 EpiPen, I have to pay $200 for my EpiPen. So what's the point of paying $200 for the EpiPen when I could be on the other high deductible plan where I have a copay for my drug and that copay is $30? So if I'm only getting my EpiPen twice a year just to keep them current, right, I'm paying $400 versus paying $60. Okay, great. The money that I'm putting into the health savings account, I blow the tax savings, right, because it's costing me so much more for the service that I need in lieu of getting the 30%. That's why that would be the easiest fix, is to just make HSAs eligible for everybody.
Interesting. Okay. Right. So an HSA account, would your employer tell you that you're eligible for it based on what you pick?
Yep.
Okay. So people would be able to figure that out. But that might be a way if a business owner has maybe younger employees that might be attractive? Or is it for anybody?
It's attractive for those that not everyone, right, is mindful to say, hey, I want to put money, disposable income away right now for a rainy day when I get a medical bill down the road, right, with the cost of everything that's going on. A more efficient tool for the employer is the health reimbursement account, which is the HRA. The HRA is employer dollars owned by the company. Think of it like an allowance for your kid, right? It's the easiest way of looking at it, all right? You have a high deductible plan. We put this in place. I, as the employer, am going to give you basically a company credit card, all right? And I've loaded $1,000 on it for you to use towards your medical care. If you spend the $1,000, great, it's there for you. And if you don't spend the $1,000, great. I, as the employer, recoup that.
Okay.
And I can use that to help offset future increases.
Okay.
All right. So that's the most efficient tool for the employer because it is not a fixed cost, it's a variable cost.
Gotcha.
All right. If an employer contributes to an HSA, that money is immediately the employee's money. Employee leaves tomorrow, that's their money, right? If an HRA employee leaves tomorrow, they didn't spend what was in the HRA, that doesn't go anywhere.
And then what's an FS? Is it FSA?
Yeah, we're good. Yeah, FSA is a flexible spending account, typically employee driven. It could be employer and employee. It's kind of the middle of the two. That's when the employee voluntarily elects out of their paycheck to say, hey, I got this FSA, cool. I know I got dental bills, I got vision bills, I got health insurance costs. I want you to take $1,000 out of my pay over the course of the year. That $1,000 gets loaded on that card instantly. That $1,000's coming out of my paycheck on a pre-tax dollar basis, which is really cool. So it's really only costing me $700 to have $1,000 on this card. And then every time I go to the doctor's office, dentist, eye care, I give the card. So I've prepaid that with pre-tax
and so that's
dollars.
Like for your deductibles, for your things that they don't pay. And that one, is that the one you have to use it or lose it?
Yeah, they use it or lose it, but a few years, going on 5 or 6 years now, right? They have a rollover feature that's on it. So now it's $600 and change, right? It gets increased each IRS.
So you don't have to do that.
You're not at
like Christmas
end of the year. You're rolling into the pharmacy and buying vitamins and all the cold and flu medicine. Now you can have up to $600 and change roll over from year to year, which is nice. So there's ways of combining HRAs with FSAs. You can't have an HSA with some of those plans. So there's all these rules and regulations and compliance things that you have to deal with. But those are the funding vehicles to help utilize pre-tax dollars to pay for out-of-pocket medical costs.
So I'm glad you mentioned compliance because that's where I wanted to go next was obviously nobody has your expertise in terms of the people working at the business. So what do they need to do to make sure they're following the right laws and rules and whatever?
It's absolutely huge and can be very costly if you don't follow these. So the two things that every employer needs to have that they're probably not aware of. Number one is they all must have a Section 125 premium only plan. This is a plan document that you have on file with the IRS that allows you to take your health, dental, vision, all those deductions that come out of your paycheck pre-tax. This is the vehicle that allows you to do that. If you don't have that and you get audited, you're in trouble. All right, You're getting fined. You're going to have to pay tax on all of that stuff. So it's a simple document you have in place to go out there. You typically see payroll providers provide that, but they might charge anywhere from $400 a year for that stuff. You can pick one up for like $250. All right. Second thing is you have to have an ERISA 402 plan document or a wrap document. This is a legal document that basically spells out the shell or outline of your benefit offerings. We offer these benefits. These are who eligible for these benefits. These are the carriers. This is the number at the carrier to call should you want to dispute or attest something. This is what happens when you leave. The coverages end on these dates. So basically gives you that architect of how those things work. Every single employer in the country has to have something like that if you offer benefit plans. Most people have never heard of that.
Wow.
All right. That's the first thing an attorney is going to look for, right? If there's some type of dispute over, hey, somebody didn't treat me fairly about these benefits, most employers are going to lose right off the bat because they don't have one of those in place. So
is that what would outline to the employee? So, I'm starting on January 1st, but benefits will kick in, March
new hires,
whatever,
eligibility, how many hours you have to work, defines dependents. So it's about, those are typically, 20 to 27 page documents, depending on how many benefits you have of legal stuff that's all there. But it's one of those required notices that an employer has to have. The government says you have to have it, and you have to provide it, make it available to your employees. And if you don't, and there's a claim, we come in and audit you. It's a fine for every employee for every day that you didn't do it.
Oh my goodness.
So
that's everybody, no matter if they have one employee or 100
correct.
employees?
Yep.
Okay.
Yeah, got to have that. So that's just at the employer, just for offering benefits. Those are the things that you have to have. Then we get into the pain in the butt compliance items, which is really driven by your company size, right? So when you hit 20 is the magic number, 20 is the magic number for who's primary, Medicare or my group health insurance, all right? Because if you're under the age of 60, if you're over the age of 65 and still working, all right, for a company that has less than 20 employees, you have to get Medicare. A and B costs money. Costs $202 right now, right? Because if you don't, your health insurance plan isn't going to pay the claims because they get to say, we don't have to pay the claim. Medicare goes first.
Right.
And then Medicare says, if you don't get it at 65, we're going to penalize you for the rest of your life if you don't get it when you're supposed to.
Oh.
Next major milestones is 50 employees. Then we wonder the wonderful world of ACA compliance items, which is probably every employer's nightmare. People right now who are watching this are cringing. For those that are over 50, when I talk about ACA reporting, 1094s, 1095s. This is a very, very tedious exercise of which you have to file, all right, with the government every year on all of your employees, who's eligible for insurance and who took your insurance.
And that's the notice I get in the mail from the form or whatever.
Yeah.
They say, keep this with your IRS
keep this with your
forms.
IRS in case it's asked and things like that, right? So the individual mandate went away with Obamacare literally like after like 1 year. But they kept the employer reporting on it, right? The real purpose of the 1094 and 1095s is to make sure that you don't get a subsidy from the state or the federal marketplaces when you are eligible for your health insurance. That is a automated system, right? I could go on right now and get health insurance. I know how to answer the questions and get free health insurance, right? It's not truthful. It's just like filing taxes, right? How much in the gray area do you want to play when you're answering your questions? But most people don't realize this. If you work for an employer that has 50 or more total employees, they have to offer health insurance. And that has to be affordable. And if it's not, that employer is fined, penalized for that. So most employers with 50 or more employees offer affordable health insurance. Affordable is a very vague term, right? To me, affordability is, all right, zero. Anything more than zero is not affordable to me right now, right? Versus it's an IRS formula. It's an actual formula, right? So those employees are not eligible. If you work for a big employer, you are not eligible for a subsidy at all, regardless of your income.
Wow.
All right. And that's what the 1094 and 1095 says. And what we see happen, right, is I'm going to go on the marketplace. I'm going to answer that question, is it affordable? I'm going to say, no, it's not, because to me, it's not affordable in that circumstance. And with nobody knowing that there is a actual formula that you calculate that. Yeah. So the system's just going to keep carrying on and get me to my marketplace plan that's subsidized, and now I'm getting taxpayer dollars for that relief. Yeah. When that gets matched up to the 1094 years later, all right, when they get to auditing that,
you're going to be in big trouble.
I'm getting a letter.
Yeah.
From hey, you got a subsidy when you're supposed to. Guess who's going to have to pay back that money?
Wow.
Right? So that's an education process, because it's an argument with some of these employees, because they might be qualifying for the essential plan from New York, which is like $20 a month, right? But they're only qualifying that because of their income, not realizing that they're not eligible for it because they just happen to work for an employer who does make the coverage affordable that passes the IRS test or rule. And I don't want that employee to get stuck with owing thousands back to the government years later, because it's not just going to be I owe it. I think I'm going to owe it plus interest, right? And then the employer gets fined.
Those are things that an employer needs to really be educating their employees about, so that the employee is protected and the employer is protected. Because the employer will get fined if the government goes, your employees are on the marketplace getting subsidy, we're coming after you as well. And then they start, the employer has no control over that stuff. So these are just the silly compliance rules when you hit the magic number of 50, right, that you have to deal with on top of all these other HR compliance issues like FMLA and things like that. And then as you scale up, when you get into 100, then you have different funding arrangements for your health insurance. So there's a lot of milestones to keep track of as you go up. And then there's just new, fun, wonderful compliance items you get to deal with at each stage. Well, and it feels to me like a business owner who thinks, I can't afford to either outsource HR or my benefits, or deal with a third-party provider for my pay stubs and everything, is probably being penny wise, pound foolish, because nobody starts a business unless it's an HR staffing business because they're good at this kind of stuff. And this, not only does it sound incredibly complicated, but the goalposts keep moving, right? The rules are just changing every year.
Every year the rules change.
At the very least,
Yep.
Doesn't it make you – Jordan's sweating over here.
Are my eyes wide enough? No, I mean, you do need help, because how could you possibly do everything you're doing running a business and also understand the changing marketplace of all this and how fast it moves and changes year to year, It makes my head spin.
I know.
It does. Yeah, most people it does make their head spin, which is why I think it's important to make sure that you're partnered with the right.
You've got good people.
The right folks on that, because it doesn't cost anything to use a broker in that 2 to 99 space. All right, they're paid directly by the insurance carrier, and it has no impact on those rates, because those rates are already filed and paid for by New York State sets those rates.
So it's free help you'd be silly not to take.
For that market. For that market space. Absolutely.
So let's talk about the broker relationship for a second. So if I only deal with my broker, if my benefits renew on January 1st and in October, we have a little meeting and then we're done, and I don't talk to him for another year. Is that what should I expect from that broker relationship, or how should I drive that to be more advantageous?
Absolutely, you should be expecting a lot more, right? That might have worked 10, 15 years ago, right? When these health insurance plans were a fraction of the cost that they were today, and there was not a ton of change year to year onto it. There is an annual renewal process every year. So that is a process. You do need to go through that every year. But really, whether you're a small business of 5 employees or up, right, benefits is too important, as we covered in a lot of our other questions, right? As a retention tool, an attraction tool, a compliance issue. There's just too many things going on for you to just be in touch with your broker once a year. How I explain the broker role should be is, right, we really should be an extension. We should be your benefits team. We're an extension of your organization. We're the benefits experts, right? This is one hat that I don't want you to have to wear anymore as a business owner. I just need you to do 3 things, right? Tell me when you hire somebody, tell me when you let somebody go, and pay your carrier invoice.
Okay. Even if you can't log on the system, Jordan.
Right.
You take care of those 3 things, right? Your broker really should be taking care of everything else for you, right? Onboarding the benefits, calculating the deductions, taking care of the terminations, providing COBRA notices, the employee life cycle as far as it relates to benefits. That should be a hands-off approach for the business owner, right? So your head's not spinning, right? Because you have you have a lot of other things going on in the business, and that's what a true broker with the right service staff around it should be offering clients instead of the, hey, here's your grid.
Yeah.
Here are your options, right?
Yeah.
Like, a lot of times the approach or strategy is, here are the plans that are available from ABC carrier. Pick one.
Yeah.
Okay, that's not the right approach, right? The right approach needs to be, what do your employees need this year? How did that plan work out for them? Were there any complaints or issues that we ran into? Based on these needs, this is the carrier and this is the plan that we're going with. It's not a choice. It's not that you've seen the grids and there's 10 plans on there. Your head spins. You don't know what any of those things are. So making that a consultative approach really makes this process not as scary when you're dealing with the right
because you're
service
leaning on
team.
expertise that you don't have.
Correct.
And nor should you.
Correct.
You know, a business owner listening to this thinking, I don't know all that. You're not supposed to. That's okay. That's why we have experts like Jeremy.
Right.
We're running out of time, so I want to wrap up with, I guess, a final thought. So a business owner today listening to this says, wow, that's a lot. I don't know that I'm doing it all right. I don't know that I'm being as cost effective or as smart as I could be with my benefits. What's the first step they should take when they, hit end on this podcast? What's a concrete step they can do to make their lives a little better? Take
inventory of what they have right now, right? It's never too late. It doesn't matter when you renew. If you're renewing in 2026, your renewal rates are available for the whole year. Right, they are out. We don't have January renewals anymore, right? Renewals come out for the 2 to 99 space basically October of the year prior. That means the rates are set, locked and loaded for all of the year ahead. So it's never, oh my God, my renewal is coming up in a month. I'm just finding out this information now. No, all that information is there. So I think it's really important to take inventory of what you have now, right? A lot of folks might not know what carrier they have, right? Might not know what plans that are being offered. When was the last time it was looked at? When was the last time it was evaluated? Renewal. If you've been with the same carrier for really more than 3 years because you've just auto-renewed and I don't want to deal with it and do that, there's a really high likelihood that you're paying way too much because there's been a big shifts in the market space as far as what carriers take turns being hot and what carriers take turns being not. So that's a huge, that you could offset the entire price increase in 1 year by going from the wrong plan to the right plan. You could actually see a decrease in your health insurance plans if it's something that you haven't paid attention to. So I think that would kind of be a top priority for a business owner to take inventory of what they have, find out who's servicing, right, those products for them, and if bring them in, have a conversation with them, make sure that they're providing value and services and giving you trends in marketplace and those types of things. And if it's not because you're getting it through, say, like a payroll service or something where you just don't have that, a lot of times this is very automatic, this is very robotic type of feel. I think it's really important to make sure you have a true consultant working with you and not somebody that's just, a low level support person that's, the face or fire. You need to talk to somebody that's a licensed expert and professional who understands this in and out. A lot of times it's not going to cost you a thing to get access to it. It might be a painful conversation that you might not want to have as a business owner, but, put in the hour. That's usually what it should take to right the ship, to make sure that at least what you're offering, dollars and cents, is maximizing that dollar, and to make sure that, it's effective with your employees as far as your employee benefit strategy goes.
And I think most employers will, at least what they'll tell me is they know that their people are their most important asset.
Yeah.
And this seems like a pretty strategic step to make sure that you're taking good care of that asset like any other. Okay, Jeremy, this is awesome. Thank you so much. You really helped us unpack a topic that can be pretty overwhelming based on what Jordan said, but it's also super important for building a strong organization. So for business owners, remember, employee benefits aren't just about insurance, okay? They're about creating stability, supporting employees and their families, and building a workplace where people want to actually stay with you and grow with you. So important topic, and you need to be strategic and think through it. If you've enjoyed this episode, please follow the show, leave us a review, share it with another business owner navigating the challenges of benefits and workplace management. I'm Susan Steffen. This has been Incorporate. Until next time, keep learning, keep building, and keep investing in your people.